And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it. Imagine a financial realm where the underdog takes the throne, where the overlooked becomes the overachiever. Today we're delving into a narrative that's stirring the markets and challenging the norms. Market mavens, those guardians of economic foresight, are laying their reputations on the line with a forecast that's not just bold, it's revolutionary. They claim with unwavering conviction that silver, a metal often shadowed by the lustrous allure of gold, is on the brink of an epic ascendancy. Brace yourself for a figure that might just redefine your view of precious metals. $3,250. That's right, silver, traditionally a poor man's gold, is poised to not just meet, but potentially outpace its illustrious counterpart. But how could this be? What seismic shifts and hidden dynamics are at play in the labyrinth of global finance that could propel silver to such dizzying heights? Keep watching as we unravel the layers of this extraordinary prediction, dissect the facts, and explore the insane market news that's setting the stage for silver's monumental rise. This isn't just a story, it's a financial odyssey. But just before we go, I'd like to say it takes a lot of time to research and make these videos for you guys. I'd appreciate it if you like this video and subscribe to my channel. Now let's start this amazing news segment off with a discussion involving Andy Schectman.
Admission, an outright statement from OPEC. We're not taking dollars anymore. I mean, Brazil just applied to OPEC. You have the majority of all of the oil production in the world. If they say we don't want dollars any longer, it creates a very, very, very big problem.
Why would they do that? Why would they say we don't want dollars anymore?
Well, because, I mean, look at what happens if you end up on the wrong side of the Western ideology. You can have your assets frozen. And in fact, even in the case of what's now being discussed, is to confiscate those assets and use them to rebuild the Ukraine. Look at what we did to Iraq. We went in there under a false pretense 20 years ago, and we're still occupying their country. They made $90 billion in oil revenue last year. They asked the government this year for $1 billion, and we said no. Really?
But Andy, is moving away from dollars the same as saying we're no longer using dollars? I mean, I can see from the BRICS Plus perspective the incentive to reduce the reliance on the dollar, and as we discussed, the weaponization of it certainly hasn't helped. But why go to the extreme of saying we're not accepting dollars at all?
Because I think, Michelle, there's a large portion of the world, much larger portion of the world than is found here in North America, that is tired of 500 years of Western dominance and suppression and coercion. And I think that this is the rallying cry that's bringing everyone to the table, that people want to I think, have the standard of living and not be told how to do things. This rule-based order where we're the ones setting the rules and everyone else has to follow by them. And when you see the way all of these countries are pushing back against the West and our ideological viewpoints maybe don't mesh so well with a large portion of the world, but a lot of these countries who may have felt this way haven't had the ability to do this in and of themselves on their own. Like a country like Venezuela, who has the largest known oil reserves in the world, they just formally applied to BRICS. So you find safety in numbers, and I think that's kind of what it is. This is our shot to have the life that we want and to do it under our terms. And they are finding safety in numbers, I believe. So not to mention that, I mean, look at it this way. Why would you want to sell your oil for dollars, a currency that is being inflated away, literally, as we sit here and watch it literally lose value precipitously? Why would they want to do that and then reinvest them into treasuries that have been a disaster And then if you don't do what they tell
In the
you to
labyrinth
do,
of
or
global
you end up
finance,
doing
precious
something
metals
to
have long
defend in
reigned
your
as the
mind your
bastions of
own
value and stability.
interests,
Gold traditionally crowned
your
as
own
the
political
ultimate symbol
or
of
rather
wealth and
your
security.
own border
But beneath the
interests.
surface, a silent contender has been steadily carving its path, often unnoticed yet undeniable in its potential. Today, we cast the spotlight on silver, the unsung hero of the precious metals world. As history unfolds, silver has remained in the shadows, often perceived as the understudy to gold's stellar performance. But what many fail to realize is that silver's journey is not just a tale of value, but of versatility and untapped potential. In our modern economy, silver's role extends far beyond the confines of vaults and safety deposit boxes. It's a crucial component in industries driving our future, from solar panels capturing the sun's energy to medical devices safeguarding our health. Now let's turn our gaze to the numbers, the silent narrators of truth in the world of finance. While gold has captivated investors with its steady climb, silver has been charting its own course, often outpacing gold on percentage basis, yet somehow remaining a lesser-known story. It's this peculiar dance between perception and reality that sets the stage for what some experts are now predicting, a shift so profound that it could reshape the precious metals hierarchy. But what's driving this potential paradigm shift? Why are seasoned market experts staking their reputations on silver's meteoric rise to $3,250, a figure that would not just challenge but potentially eclipse gold's dominance? The answers lie woven within a tapestry of market dynamics, geopolitical shifts, and a reawakening to silver's intrinsic and industrial worth. So, as we embark on this journey through the realms of economics and investment, keep your mind open to the possibilities that lay hidden in plain sight. For in the world of precious metals, it's not just the glitter of gold that holds the promise of prosperity, but also the gleaming potential of silver, ready to emerge from the shadows and claim its rightful place in the spotlight. Are you ready to continue unraveling the layers of this financial enigma? Let's dive deeper into the analysis and insights that could redefine the future of precious metals.
In my head. So if reverse repos are zero at a time when interest rates are 5%, so who is buying all these treasuries on the primary market in the treasury auctions? Where are the dollars coming from? If the dollar supply is shrinking, there's got to be new dollars to buy these treasuries, right? So they must be coming from somewhere. They're coming from the reverse repos. We know this because every time there's a new treasury auction, the reverse repos shrink, right? So they're coming from the reverse repos. So if there's no reverse repos, who bids on the treasury auctions? And maybe people can come up with another possibility when in 13 weeks, it's a rough estimate based on how fast they're shrinking. It could be 13 weeks, 15 weeks. It could be weeks off, but what does it matter? You know, we're talking about like a 50, 60 year fiat monetary experiment here. And we're talking like we're trying to get into a precision of weeks, and I can't really do it exactly. But okay, so let's say 13 weeks. So who buys these things? The answer is I don't know. I mean, there's some theories out there of articles that I've read that the reverse repos, instead of people lending cash, instead of banks or money market funds, whoever they are, lending cash to the Fed, getting securities in return. So when they run out of cash, okay, so fine, they'll lend securities to the Fed in exchange for cash with which they'll buy treasuries, but then they have to return the treasuries to the Fed the next day. I mean, this thing becomes very, very tight. And again, like, I'm speaking as if I'm an expert, but I admit that I'm not, and because nobody really is, and even Jamie Dimon isn't, and because if he was, he would have predicted the Repocalypse in 2019, but something like the Repocalypse is going to happen again. And some kind of treasury auction is bound to fail if there's no money in the system to buy those securities. Exactly when that happens, I don't know, but I can see the same thing happening now. Not the same exact, but something parallel happening now to what happened back in 2019, because we're running out of extra dollars. And you can see that because the dollar supply is contracting, because the Fed counts
As
it
we
up
delve
to the
deeper
dollar
into the realm of precious
every
metals,
month.
it's crucial to
And
understand the intricate
it's shrinking.
dance of
So,
market
like, who's
forces
going to
that
buy these
underpin
auctions?
their value.
I don't know.
The stage is
And
set with gold,
what
a
happens
symbol
then?
of opulence and stability. Its shine reflecting centuries of human desire. Yet in the wings awaits silver, its luster not just in its gleam, but in its potential to outshine its golden counterpart in ways that are both subtle and startling. The whispers of financial experts and the murmurs in the market corridors speak of a shift a reevaluation of value that challenges conventional wisdom. The journey of silver, from a mere supporter of the precious metals cast to a potential star performer, is not just a tale of market dynamics. It's a saga of overlooked potential finally coming to light. Let's cast our minds back to the historical performance of these metals. While gold's ascent has been steady and admirable, silver's trajectory tells a story of silent resilience and untapped potential. The figures are stark and compelling. From 1932 to 1980, while gold's value surged by 3,770%, silver's value skyrocketed by an astonishing 20,730%. Yet, this isn't just a story of past glories, it's a beacon indicating what might lie ahead. In the present day, the market's pulse beats with news that sends ripples through the financial fabric. Silver's price, edging close to $23, is not just a number, it's a testament to its growing allure in times of geopolitical tensions and economic uncertainties. The dance of market forces, from Federal Reserve policies to the ebb and flow of global crisis, plays a tune to which silver seems to move with agility and grace. But the question that burns in the minds of investors and spectators alike is clear. What could possibly propel silver to the staggering heights of $3,250, outstripping gold in a financial twist that few could have anticipated? The answer lies not in a single revelation, but in a mosaic of factors, each piece a clue to the unfolding enigma. As we stand at this crossroads of history and opportunity, we invite you to stay with us. The journey into the heart of this financial mystery is far from over. In our next chapter, we'll peel back the layers of expert analysis, geopolitical shifts, and the strategic interplay of market dynamics that paint a picture of a future where silver doesn't just shine, it dazzles. Before we venture further into this narrative, take a moment to reflect and engage. What are your thoughts on the potential for silver to redefine the precious metals market? Share your perspectives in the comments below and join the conversation that could reshape how we view value, stability, and potential in the world of finance. Ready to continue unraveling this compelling story? Let's proceed to the next chapter, where expert analysis and predictions await to shed light on silver's shimmering path ahead.
So important to recognize time frames when we talk about everything. Right now, if you ask me for the next day or so, I actually see silver coming off, and even for the next week, 2 weeks. But I'm expecting you asking me, Francis, if I speak to you in 6 months or a year's time, where's silver going to be? And for me, that then becomes a lot more interesting. And the main driver, it's kind of the truck and trailer, and I call it, you need to visualize the relationship of both gold and silver as a kind of where gold is the truck and silver is the trailer. And instead of a traditional tow bar between them, there's a bungee cord. And what tends to happen is you start to hit a big hill, and the 4x4 or the truck floors it and starts to pull quite strongly, and the cord starts to extend. The bungee cord that you strangely using as a tow rope actually is the gold-silver ratio, and what you see is that extends, and the heavy trailer of silver starts to fall really far behind, hardly moving at all, while the 4x4 is going up. Now, you know, when I'm using this analogy, that in actual fact there's potential energy then being built up in the super thick, it must be said, bungee cord, and eventually you get a catch up, such to the point that the trailer can come whizzing past the truck itself. So I like simple metaphors to help people get along. Now, the answer to that many people say is, oh, Francis, we're sick and tired of hearing one of these days silver's going to happen. You mentioned it yourself, you get fatigue. I just want to point out, the first time we ever called a turn in the debt markets and said the debt markets will not be the perpetual bull markets, the buy the damn dip. This is a 40-year cycle, was during the year of 2020. And since then, yields have gone up, even though there's been pullback periods. You're in one of those now, by the way. It's probably worth us later having a short thread on that. But nonetheless, it takes a long time for macro trends to end. But when they turn, they turn and they turn and they stay turned, and they then move for a very extended period. And in actual fact, they play catch up in the opposite direction. In short, I brought in the debt markets to explain your question on silver, which I've tied also to the question of gold. So I'm adding a lot of variables in here, but I'm doing this intentionally. Because you've had a 40-year bull market with, dips and rallies in debt. You don't, that's an escalator. It's a very flat, lengthy escalator. Watch the hand, it's kind of like that. You do not get a 40-year mild decline like that from that escalator height. You take the elevator down. It's the end of a debt system. There's not a symmetrical corresponding unwinding event. It is far more abrupt, harsh, and rude, and it's really fast. But for that setup to occur, it takes a bit of time. Essentially, we're waiting for an elevator cord to snap for the debt market. Now, why talk about the debt market when the question's about silver and gold? Because they are the two competing money systems. So one involves a banking system, which is an intermediating. You borrow money into existence. You have a T-bill account, an asset and a liability. You take out a mortgage, you own a property, but actually the bank owns it. That becomes, you are their asset inherently. That is the current financial system, which is in the process of breaking. Now the turbo juice, as I like to say, for both gold and particularly that lagging with real tension in the bungee cord rope silver, really comes to life in the capitulation and failure of the other alternative. When both, we kind of have a parallel system. You do have both as money systems. It's just gold and silver is not effectively being used as one materially at any great level. Gold is starting to be used again as store of value rather than debt. So that process has already begun. But in terms of daily transaction money, silver doesn't have a role yet. It's just an industrial metal that's supposedly a bullion. So what happens is as the debt collapse occurs, and in this question, I'm tying other markets to it, and I want to point out to everybody, March 2020, peak bond valuations. The rates, the yields dripped right down to 0.3 on the US 10-year debt markets. That was the point that the gold-silver ratio simultaneously. So for those that doubt that these two things are tied at the hip, the success of one is the failure of the other, and the failure of the other is the success of one. Just go look at the technical charts. The 128 gold-silver ratio occurred as you had peak bonds. 0.3, buy the damn dip. Everybody from a lot of the stars that we follow on Twitter with massive followings, buy the dip on bonds, wear diamonds. That's what they're saying. We came out and said, buy the dip on bonds, wear coal. And in fact, that's a slur on coal. Coal has actually got great use as an energy use case and will probably hold its value far better, apart from not looking particularly fashionable if you're wearing it around your neck. So in terms of all of those things, silver's fate is tied to gold, even though there's this divergence. It's a very thick bungee cord. It can stretch real far, but the notion that the relationship will be entirely severed is wrong. So everybody who's sitting here and saying, damn, silver looks soft, like it's going to go lower. It's at about 23.5, and it's drifting off. You could drop again to the low 20s. That's
in this unfolding saga of silver's ascendancy, we now turn to the minds that sculpt the contours of financial thought, the experts whose insights pierce through the fog of market speculation. These are not mere speculators, but seasoned veterans who have weathered the storms of economic upheavals and sailed for the tides of market trends. Their voices carry the weight of experience, and their predictions form the bedrock of this narrative where silver emerges, not just as a contender, but as a potential conqueror in the realm of precious metals. Francis Hunt, a name synonymous with precision and insight in the trading world, introduces an analogy that paints a vivid picture of the relationship between gold and silver. Imagine, if you will, a truck representing gold, steady and reliable, towing a trailer, which is silver. Between them stretches a bungee cord symbolic of the gold-silver ratio, a measure of their interconnected fate. For a while, the trailer lags, creating tension in the bungee cord. But this is no ordinary trailer, nor is it an ordinary cord. This is silver charged with potential energy, waiting for the moment to unleash its pent-up momentum and surge forward in a display of financial force that could redefine market dynamics. This isn't merely poetic imagery. It's a metaphor grounded in the mechanics of market forces and historical data. The gold-silver ratio, a metric watched keenly by those who navigate these waters, whispers tales of cyclical trends and potential reversals. When the bungee cord stretches too far, the market's natural rhythm suggests a snapback, a moment where silver, long in the shadow of gold, could embark on a rapid ascent, catching up and potentially surpassing its illustrious peer. But what drives this potential energy in silver? It's a confluence of factors, each a thread in the tapestry of this market narrative. The macro trends, like shifting debt markets and evolving geopolitical landscapes, form the backdrop against which silver's story unfolds. The recent shifts in 2020, a year marked by turbulence and transformation, set the stage for a revaluation of value and a renewed interest in assets that offer both stability and potential. As we journey through this narrative, it's crucial to align our perspective with the time frame of these market movements. The world of commodities, especially precious metals like silver, doesn't dance to the frantic tempo of day-to-day trading. It moves with a grace that respects the ebb and flow of economic cycles, demanding patience and a keen eye for the subtle shifts that signal impending changes. In this chapter of our financial odyssey, we've glimpsed the potential energy stored within silver, a metal poised for a movement that could reshape the landscape of precious metals. But the story doesn't end here. As we peer into the horizon, the signs suggest a gathering momentum, a buildup of forces that could catapult silver into a new realm of value and recognition. As we pause at this juncture, reflect on the insights shared by those who read the markets like seasoned navigators. Ready to delve deeper into the forces that shape the destiny of silver? Stay with us as we uncover the geopolitical shifts and strategic moves that could turn the potential energy of silver into a kinetic force in the market.
All these themes, the dollar, debt, currencies, the weaponized dollar, the BRICS, they're all interrelated. And obviously, when the sanctions came out against Putin in 2022, I and many others were saying this was a game changer. This was a watershed moment. Grant Williams, Jim Rickards, many others. It was incredibly myopic policy on the West. This argument that Russia would run out of money before the West ran out of energy just proved to be untrue then and now confirmed to be untrue today as Poland goes nuclear and Germany's burning coal in the winters. So this idea that you could weaponize a world reserve currency was a disaster from the beginning. I said, like the de-dollarization or the decoupling of gold in 71, that the process would be slow. Just as Nixon welched on the gold standard in 71, the inherent purchasing power of the dollar got weaker and weaker and death by 1,000 cuts when measured against gold. And I said in a similar way, this weaponization of the world reserve currency, which again, Robert Triffin, Keynes warned against, even Barack Obama in 2015 said that would be a mistake. I said that would be a slow process, death by maybe 100 cuts in terms of the dollar's supremacy and hegemony. Its supremacy is still very much there. Its hegemony is irrevocably lost. And in 2022, from day one of the sanctions, we said that just pushes Russia and China closer together. It also incentivizes the BRICS to expand. And in just the brief period since 2022, the speed and scope of that expansion is happening faster than I thought. In the context of the most recent article, that was just in an allusion to 2023 oil sales. For the year of 2023, 20% of the oil sales were outside of the U.S. dollar. You can't overestimate or underestimate or overstate the importance of that simple change. That's one example. When you have Russia selling oil now to China and China paying for that oil in yuan, which the Russians can then convert to gold on the Shanghai Gold Exchange, or when you see the 200-day moving average in the Shanghai Gold Exchange repricing gold differently than in London and New York, this de-dollarization process, not just between China and Russia, but among all the BRICS nations, which are de-dollarizing in the commodities market, you can't ignore the significance of that. You simply can't. And the speed in which it's happening is extraordinary. It's also even Saudi Arabia in the oil trade. It's very important. Saudi Arabia now does more trade with China than it does with the US and Europe combined. So these are important changes that are happening because no one trusts the US dollar as a neutral reserve asset anymore. Central banks are making record-breaking purchases of physical gold and not US treasuries. Since 2014, there's been over 100 billion negative in US treasuries and 500 billion up in physical gold among the central banks. These oil changes, this de-dollarization in the BRICS market, the size of the trades happening among the BRICS, the bilateral agreements outside of the US dollar, now well over 45 countries doing that. You can't ignore that. And the speed and scope of that, again, since 2022, since the West in general and the US in particular spearheaded this weaponized dollar against Putin it has completely backfired. It was a headline-making attempt to destabilize the ruble and flex Western muscle, but the Western financial and military muscle just isn't what it was promised to be, not only on the battlefields of Ukraine, but in the U.S. Treasury markets, in the central banks. We're seeing evidence of that objectively as a failed policy. And again, it's not trying to be anti-American or non-patriotic. I think you have to be very patriotic and say we have to have better statesmen, better financial savvy when we're making political or international decisions like this. I think it was a fiasco, straight and simple. And it does, obviously, when you talk about the speed and scope of this de-dollarization, the arbitraging of gold in the commodity markets, the settling outside of the US dollar and physical precious metals, it's undeniable. It's not a gold bug or gold bull.
As we journey deeper into the narrative of silver's ascendancy, our gaze shifts beyond the confines of traditional market dynamics, reaching into the geopolitical arena where tectonic plates of global finance are shifting. Here, in the complex interplay of nations and economies, we find clues that hint at the potential surge of silver, a metal whose fate is intricately woven into the fabric of global events. In recent times, the BRICS nations, Brazil, Russia, India, China, and South Africa have taken bold steps, expanding their alliance with the inclusion of new members and challenging the long-standing dominance of the US dollar in global trade. This strategic expansion, welcoming nations like Saudi Arabia, the United Arab Emirates, Egypt, Iran, and Ethiopia, is not just a growth in numbers. It's a statement, a declaration of a new era in global finance where diversity in economic partnerships and reduced dependency on the US dollar paint the future in different hues. At the heart of this narrative is the concept of the petrodollar, a pillar that has upheld the US dollar's status as the global reserve currency. However, the winds of change are blowing, with bilateral trade agreements increasingly favoring local currencies over the dollar. This shift is particularly poignant in the oil market, a sector where the ebb and flow of currencies can ripple through economies and industries. Silver, with its dual persona as both a precious metal and an industrial powerhouse, finds itself at the crossroads of these shifts. The metal's industrial demand, tied to sectors like technology and renewable energy, positions it uniquely in a world where the transition to greener and more technologically advanced economies is not just a trend, but a global imperative. But the BRICS narrative is not just about economic alliances, it's about a vision to reshape the financial architecture of the world. The discussions around establishing a common currency for trade and investment among the BRICS nations and the flirtation with commodity-backed currency systems signal a potential paradigm shift. In this new financial order where gold and commodities could play pivotal roles, silver's position is elevated, its significance magnified by the very industries that drive our future. As we navigate through this complex web of geopolitical strategies and economic policies, the allure of silver grows stronger, its story enriched by every new development on the global stage. The metal's journey is no longer just a tale of markets. It's a saga that encompasses the shifting sands of international alliances, the redefinition of value, and the strategic positioning of nations in a world that's rapidly evolving. In this chapter of our exploration, we venture beyond the market charts and into the realm of global finance, where the fate of currencies and commodities is shaped by the hands of nations and the pulse of economies. Silver, once seen as merely a precious metal, emerges as a protagonist in a narrative that's as much about economics as it is about the future of our world. Are you ready to continue this journey? Stay with us as we delve deeper into the comparative analysis of silver and gold, unraveling the layers that make these metals not just elements, but key players in the drama of global finance. As we continue unraveling the compelling narrative of silver's ascent, it's time to dive into a comparative analysis that highlights the unique interplay between gold and silver, two precious metals that have captivated humanity for millennia. This isn't just a comparison of value or price. It's an exploration of the underlying factors that set the stage for silver's potential meteoric rise, a journey that could see it not just catching up to, but possibly eclipsing gold in a dramatic financial twist. Gold, often hailed as the ultimate safe haven asset, has long been the preferred choice for investors seeking stability and a hedge against economic turmoil. Its luster and scarcity have cemented its status as a symbol of wealth and prosperity. Yet beneath the surface, a quiet revolution is taking place, with silver gradually stepping into the spotlight, shedding its label as the poor man's gold to reveal its true potential as a powerhouse in a precious metals market. But why are some investors shifting their gaze from gold to silver? The answer lies in a blend of historical performance, market dynamics, and a nuanced understanding of both metals' roles in the economy. Historically, silver has demonstrated a remarkable ability to outpace gold on a percentage basis, a fact underscored by the staggering difference in their price appreciations from 1932 to 1980. However, the story doesn't end with historical data. It's also about the present and the future. Today, silver's appeal is bolstered by its dual nature, serving both as a precious metal and an industrial commodity. Unlike gold, silver's industrial demand ties it closely to the technological and renewable energy sectors, industries that are not just thriving but are pivotal to our future. This unique positioning suggests that silver's value is not merely rooted in investor sentiment or economic uncertainties, but is also driven by tangible, real-world applications. Moreover, the evolving global financial landscape, marked by the strategic maneuvers of nations and alliances like the BRICS, adds another layer of complexity to the silver story. As these nations explore alternatives to the US dollar-dominated trade and consider commodity-backed currency systems, silver's role could be further magnified, transcending its traditional confines and becoming a strategic asset in the emerging financial order. In this intricate dance of markets and economies, silver and gold are not just passive participants, they are dynamic entities, each with its narrative and potential. As investors and market watchers ponder the future of these metals, the interplay of economic policies, geopolitical shifts, and industrial demands creates a mosaic of possibilities, painting a future where silver's shine might just outshine the golden glow. As we stand at this juncture, witnessing the convergence of historical trends, market dynamics, and strategic global shifts, the stage is set for a financial drama where silver could take the lead. And as you, our discerning viewers, navigate through these complex narratives, remember that this journey through the world of precious metals is not just about understanding markets, it's about envisioning the future. So as you reflect on the comparative analysis of silver and gold, consider the broader implications and the potential opportunities that lie ahead. And if you're eager to continue this journey with us, exploring the depths of market insights and financial wisdom, don't forget to subscribe, for the chapters that lie ahead promise even more revelations and insights. Ready for the next step in this financial odyssey? Stay tuned as we delve into the various investment strategies and options available in the silver market, guiding you through the choices that could shape your financial future.
The gold market had that surge December 3rd or 4th, the first day of the December, where you went up and finally hit the stops, the buy stops, no doubt, shorts covering their losing positions, late longs coming in at 2,100, okay? And you gushed within 45 minutes up to 2,150. Why? Because it was in the dark. Two, it had to be a massive amount of buy stops there. And so they were elected and it just whooshed. Okay. But once all that buying dissipated, literally within that first hour, there was probably a void below. And so anybody who came in and sold, and I think the BIS actually did sell, dropped it immediately back down. And within 6 days of that high, gold traded down to 1980. Okay. Since then, gold launched back up to the upper 2000s and has never taken out that 1980 low that we made 6 days after that high. So you could basically take early December, second week of December, and we've been caught in between since then. A lot of selling, but this time, unlike last year, March to October, where it went down, a couple $100, or that 2022 drop, it dropped 20%. This time the selling has just created wheel spinning, okay? And I think the bears have run out of the clock. I think, they needed to do more than they did. And all of a sudden yesterday, if you'll notice, while gold is still spinning here in the lower 2000s, silver shot up $1. Very interesting, very curious. And the miners have begun to stabilize again. Of course, they're always lagged to gold. At some point, they won't be. So pay attention to that. We measure that and we issue that in our reports. But I think gold is doing well. It's hanging in there despite the constant doubters. And they are abundant. Even among the gold bulls. And I would say that this next upturn that we're probably on the cusp of right now, the next daily, weekly upturn, could be the one that engages us. And I would give you a number. You get much back over 2,100 gold again?
Yeah, definitely for me, I've had this melt-up forecast for a while. Now, I called the 2020-2021 market a melt-up. That was a separate melt-up. I mean, we don't usually get melt-ups. They're something that come all around, very rarely. So to have two in such a short period of time can confuse people. But I think it is because of where we are late in both the secular bull market and also late in the super cycle, which I define a super cycle as that period, that long cycle between two depressions, in this case, the 1930s, and what I think will be a depression in the 2030s. So we're in the last decade of a super cycle. So when you get to that stage in big cycles, things get a lot more volatile, and you can have these blow-off moves. So that's in essence what I think we're seeing. But yes, I've been talking about a melt-up long before last week's meeting, and I took a lot of grief in 2022 and early this year, and frankly, probably also this past fall when the market sold off. People thought it was a crazy call, and it is an extreme call. So I had a lot of people really questioning, that call and didn't believe it. It's only of late, with this market moving back towards all-time highs, that people are starting to jump on the bandwagon and say, hey, maybe you have something there. Maybe it is right. I don't think most people still believe that we can get to 6,000.
As we delve deeper into the
7,000 on the
multifaceted
S&P,
world of silver,
but they
it becomes
are at least
increasingly clear that this
understanding
precious metal's
that
significance
this thing
extends
is now
far
no
beyond its
longer a bear
monetary
market.
value.
There's some
Silver's
legs
role in
to
the
it.
modern economy is both dynamic and indispensable, underpinning its potential for growth and solidifying its status as a metal of the future. In this chapter, we explore the industrial and technological dimensions of silver, unraveling how its practical applications are poised to drive its value in the evolving global market. Silver's industrial demand is a testament to its versatility and unique properties. It is the best conductor of electricity, a quality that makes it irreplaceable in numerous applications ranging from electronics to solar energy. In the realm of renewable energy, silver plays a pivotal role in photovoltaic cells, the engines of solar panels, harnessing the sun's power to fuel our future. As the world increasingly shifts towards sustainable energy sources, the demand for silver is expected to rise, mirroring the growth of the green energy sector. But silver's utility doesn't stop at energy. It's a critical component in the medical field, valued for its antibacterial properties. From wound dressings to medical instruments, silver is a silent guardian, ensuring safety and hygiene in healthcare settings. Moreover, the technological sector's relentless march forward continually unveils new uses for silver. In electronics, from smartphones to sophisticated computing devices, silver's presence is ubiquitous, facilitating connectivity and innovation. However, the story of silver in the modern economy is not just about its current applications. It's also about potential, the promise of future technologies that rely on this versatile metal. The advancement of sectors such as nanotechnology and the development of new materials and conductors could open new chapters in the story of silver, increasing its industrial demand and consequently its investment allure. As we navigate through these dimensions of silver's role in the modern economy, it becomes evident that this metal's story is interwoven with the narrative of human progress. The same silver that glistens in investors' vaults is also at work in solar farms, hospitals, and tech hubs, silently powering the engines of tomorrow's world. In this exploration of silver's industrial and technological significance, we find not just reasons for its potential rise in value, but also a deeper appreciation for the metal's role in shaping our future. Silver's journey is not just a tale of markets, it's a saga of innovation, resilience, and untapped potential. As we conclude this chapter, reflect on the broader implications of silver's industrial demand and technological applications. Consider how these factors contribute to the metal's potential growth and how they might align with your investment strategy and vision for the future. Ready to continue unraveling the narrative of silver's ascent? Stay with us as we further explore the market dynamics and the strategic decisions that could turn the potential energy of silver into a kinetic force in the world of finance.
Let's just draw the link between the commercial banking system and the central banking system. Basically, we can see that this is a situation where banks are getting into increasing difficulties over time, and higher interest rates do not help. It's killing their borrowers, the people they lend money to. At the end of the day, as to whether banks are going to not be able to pay their deposits, which was what was happening in the 1930s. Banks were just going bust, and that was the way the money supply was contracting, because banks were just basically going bust, and money supply is mainly made up of bank deposits. So, but today, what happens is that the central bank will always do everything it can to ensure that depositors do not have to write off their deposits. apart from anything else, the FDIC hasn't got the resources to compensate. The other reason, quite simply, is it's not just protecting the depositors, but if you don't rescue banks, then suddenly everybody starts really looking very seriously at, should I be lending this bank or that bank, my funds? And, you suddenly start finding that there are runs on banks because the system is no longer protecting you from bank defaults. So this is the first thing to understand, and that is that as this situation develops, the Fed and other central banks will be having to bear the brunt of these failures. It will have to rescue the entire commercial banking network, or to stand behind it and guarantee it. Now, effectively, that's an inflationary commitment, and it transfers. Worse than that, it transfers credit from the commercial banking system into, if you like, the top level of central bank credit. And the inflationary consequences of central bank credit are far greater, the expansion of central bank credit, are far greater than the expansion of commercial bank credit, because commercial bank credit is usually deployed for constructive purposes. And as long as that is the case, it's not inflationary. But when a central bank does it, the central bank basically is just diluting the purchasing power of existing currency. And this is realized in government spending through welfare and all the rest of it, which is not productive. It is non-productive. In fact, the funding of government welfare is destructive in the productive sense. So the central banks are going to increasingly get into difficulties from that end. And then there is the other problem, and this is interest rates. If interest rates start rising again, and I'm sure this is a topic you want to discuss, if interest rates start rising again, then what we will see is even greater losses on the bond portfolios on central banks. There has been some headlines. There have been some headlines about the Fed's negative equity position. There have been also headlines in the Euro system network as well. Like the Bundesbank is in the hole for something like over a trillion euros, I think it is. So there is a great general understanding that there is a problem here, but everybody's saying, oh no, this doesn't matter, as long as they can print money, it's not a problem.
As we continue to unravel the narrative of silver's potential ascendancy, we reach a pivotal junction where market dynamics intersect with strategic decision-making. This is where the potential energy of silver, charged by its industrial significance and technological applications, meets the kinetic force of investor action and market sentiment. In this chapter, we delve into the complexities of these dynamics, exploring how the strategic decisions of investors, industries, and nations could catalyze silver's trajectory towards unprecedented heights. The market, a vast ocean of transactions and trends, is perpetually swayed by a myriad of factors, from macroeconomic policies to investor sentiment. Silver, with its dual persona as a precious and industrial metal, finds itself at the heart of these forces. The decisions made in corporate boardrooms, government meetings, and trading floors across the globe all contribute to the intricate tapestry of silver's market dynamics. In the realm of precious metals, investor sentiment often swings between the poles of fear and greed, driven by global events, economic data, and market speculation. Silver, however, offers a unique proposition. Its industrial demand, especially in sectors poised for growth like renewable energy and technology, provides a stable undercurrent to its value. This is not to say that silver is immune to the market's ebb and flow. On the contrary, it's this very interplay between its stable industrial demand and the speculative forces of the market that creates a dynamic landscape, ripe with opportunities and challenges. Moreover, the strategic moves of nations, particularly those within influential alliances like the BRICS, have the potential to reshape the global financial architecture. The push towards de-dollarization and the exploration of commodity-backed currency systems could amplify silver's role on the world stage. As these nations navigate the geopolitical chessboard, silver could emerge as a strategic asset, its value bolstered by its relevance to both economic stability and industrial innovation. But the narrative of silver's ascent is not just written by nations and industries, it's also crafted by individual investors, each with their strategies, insights, and aspirations. Whether it's through direct ownership of physical silver, investment in mining stocks, or exposure via ETFs like the iShares Silver Trust, SLV, the collective actions of investors have the power to sway the market, to add momentum to silver's potential rise. As we stand at this crossroads of potential and action, the future of silver seems not just bright, but charged with possibilities. The convergence of industrial demand, technological advancement, strategic geopolitical moves, and investor sentiment is painting a picture of a metal on the cusp of something extraordinary. In this exploration of market dynamics and strategic decisions, we find not just a forecast of silver's potential, but a narrative of interconnected forces, each playing its part in shaping the future of this versatile metal. As we conclude this chapter, take a moment to ponder the role of strategy not just in the markets, but in your approach to investment and financial planning. Consider how the insights and trends discussed here align with your vision and goals. Ready for the final revelation? Stay with us as we prepare to unveil the apex, the culmination of our exploration, where we piece together the mosaic of information and insights to present a comprehensive view of silver's potential ascent.
Year probably stays somewhat above, might be 0.5% or 0.25%, but I mean those are levels below the levels we saw in 2020. So there's an awful lot of belief out there on Wall Street that we will never go back to those levels of rates, that we saw the secular low in rates, and that we're beginning a ratcheting up of rates over the next many years. I think there's one more all-time low in rates, one more lower low coming during the bust, simply because the economics of the bust are very negative, and we're going to have a deep recession, hard landing, and coupled with a financial crisis, maybe the biggest in history. What that triggers, whether the central banks know it yet or not, and they don't, but when it hits, there's only one tool that can be put to work quickly and quickly enough to try to save a system that's free falling, and that is money. You will see money printed at rates even faster in 2020. My estimate is that the Fed will push out 20 trillion in the course of fighting the bust. So, between middle of this year and say middle of next year or the end of next year, I think you could see 20 trillion expansion in the balance sheet. We saw unheard of 5 trillion expansion back in 2020, 2021. So this is 4 times that. And that was so far off anything we'd ever seen in history. And then similar from all the central banks. When I say proportionally similar, not the same numbers, but similar type magnitude of easing. And when you're doing that, when you're printing that much money, is QE. It's simply a case of buying the Treasury's bonds, buying from the dealer banks, and crediting them with cash. So they're getting new money into the system by buying up bonds. Well, if you're going to have to expand your balance sheet by 20 trillion, that's just seat of the pants estimate, but it's going to be an awful lot of bonds that are just being bought by the Fed. Never mind anybody else. Never mind institutions, insurance companies, banks, etc., hedge funds. So the demand for bonds during the bust is going to be through the roof. Now, I qualified the demand for Treasury bonds because you will see a separating of the two. Right now, both are moving together. Rates are coming down for corporate bonds. Rates are coming down for municipal bonds. Rates are coming down for Treasury bonds because the economy is still in okay shape. When you get into the bust, spreads are going to widen. That means you're going to see Treasury bonds rally a lot. Corporate bonds will probably be going the other direction. So your spreads are going to go through the roof.
As we delve into the intricacies of silver's role in the modern economy, we uncover a narrative that's as multifaceted as the metal itself. Silver's journey, intertwined with the pulse of industrial innovation and technological advancements, paints a picture of a metal whose significance extends far beyond its lustrous sheen. In the sprawling web of global industries, silver emerges as a silent powerhouse. Its unique properties, unmatched in conductivity and revered for antibacterial applications, make it indispensable across a spectrum of sectors. From the heart of solar panels, harnessing the sun's energy, to the core of electronic devices connecting our world, silver's presence is pervasive, its contributions invaluable. But as we navigate this landscape of potential and prosperity, it's crucial to remember the broader context that shapes silver's narrative. The metal's industrial demand, closely tied to the technological and renewable energy sectors, positions it uniquely against the backdrop of a global economy steering towards sustainable and innovative solutions. This is not just a story of a precious metal. It's the saga of an industrial cornerstone, pivotal in shaping our future. As we stand at this juncture, reflecting on silver's multifaceted role in the modern economy, we recognize that its journey is far from a simple tale of supply and demand. It's a narrative rich with potential woven into the very fabric of industrial progress and technological innovation. Silver's value, derived not just from its status as a precious metal, but also from its indispensable industrial applications, sets the stage for a dynamic interplay of market forces. In this exploration of silver's industrial significance, we find reasons for its potential rise in value, a promise underpinned by the relentless march of progress and the unwavering quest for sustainability. The same silver that adorns treasure vaults is also at the forefront of cutting-edge technologies silently powering the engines of tomorrow's world. As we conclude this chapter of our journey, let's carry with us the insights and reflections on silver's integral role in shaping our modern economy. And remember, this narrative is not just about understanding the market. It's about envisioning the future, a future where the luster of silver is not just seen, but felt across industries and innovations. Stay with us, for our journey through the intricate world of precious metals is far from over. As we prepare to step into the realm of viewer engagement and further analysis, make sure to reflect, engage, and most importantly, stay tuned for the insights that lie ahead in this lustrous saga.
The deficit, it boils down to federal spending. Anytime the government runs a deficit, that money gets spent, and of course that's tabulated into GDP. So, and I mean, you could take, if you took deficits out of even the last 20 years, there are many years that the economy would have statistically been negative when they printed positive growth. They printed positive growth. I mean, if you throw an extra trillion or 2 trillion on the government side into the economy and that gets spent, you know, that is, it's activity, whether it's making bombs or whatever it is considered activity. So you've got the government running, what, $1.5 trillion, $2 trillion deficit. It does get into GDP, while the private economy that you and I and most normal people feel is in fact declining and collapsing. I mean, you've got many, many sectors in the private economy that are not only negative, but in depression. I mean, look, just for example, look at commercial real estate. That has turned into an outright disaster. I just read an article yesterday or the day before where a building that was sold for, I think it was $600 million back in 2014. And if I'm not mistaken, this might be BlackRock's or Blackstone's, one of their buildings. They bought it for $600 million. They stopped making a payment in 2022. And I think there's $300 million in debt left on it. And that debt is being offered for sale at $150 million. So you're talking about a $600 million building that's going to be that is walked away from, and the lenders are going to eat 50% of the $300 million. So you're looking at a $600 million property now valued at $150 million.
Poised to synthesize the myriad insights and revelations shared throughout
decline or recession.
This is the moment where we gather the threads of our narrative, weaving them into a comprehensive tapestry that illustrates the compelling logic and potential behind silver's ascent. It's here, in the final analysis before the apex, that we piece together the intricate puzzle, preparing to reveal the full picture of silver's potential to redefine the precious metals market. We began this odyssey by unveiling the prediction that set the financial world abuzz. Silver, the unassuming contender, is on a trajectory that could see it reach the staggering figure of $3,250, outshining gold in a historic financial twist. This bold forecast isn't just a number, it's a testament to the intricate interplay of factors that underscore silver's unique position in the global economy. Throughout our journey, we've delved into the historical performance of silver, uncovering its astonishing ability to outpace gold on a percentage basis. This isn't merely a tale of past performance, it's a beacon illuminating the path to future possibilities. The intrinsic qualities of silver, combined with its indispensable industrial applications, form the bedrock of its potential, painting a picture of a metal whose value extends far beyond its lustrous sheen. But the narrative of silver's ascent isn't confined to its physical properties or historical data. It's also intricately woven into the fabric of global finance and market dynamics. The strategic moves of nations, particularly within influential alliances like the BRICS, have the potential to reshape the global financial architecture, amplifying silver's role on the world stage. As these nations explore alternatives to the US dollar and consider commodity-backed currency systems, silver's significance is magnified, transcending its traditional confines and becoming a strategic asset in an evolving landscape. In the realm of investment, we've explored the diverse avenues available to those drawn to silver's potential. From the tangible allure of physical silver to the dynamic landscape of mining stocks and the diversified exposure offered by ETFs like the iShares Silver Trust, SLV, the market presents a spectrum of opportunities for investors who align with silver's journey. As we stand at the precipice of the apex, we reflect on the interconnected forces that shape silver's narrative. The convergence of industrial demand, technological advancement, strategic geopolitical shifts, and collective investor sentiment is painting a picture of a metal, not just on the rise, but on the verge of redefining its role in the global economy. In this final analysis before the apex, we invite you to ponder the mosaic of information and insights we've shared. Consider how each piece contributes to the compelling story of silver's ascent, a story that's not just about markets or investments, but about the future of our world, where the luster of silver is set to shine brightly. Stay with us, for the next chapter in our exploration is the apex, the ultimate revelation where we unveil the comprehensive view of silver's potential ascent, backed by sound logic, historical data, market trends, and strategic foresight. The journey through the intricate world of precious metals continues, and the best is yet to come.
It certainly is. I mean, look, even the West acknowledges that. I mean, Kristalina Georgieva, the head of the IMF, in the report they wrote right around the time that you and I had our interview in Vancouver, gold a barbarous relic, or gold an international reserve currency, barbarous relic no more, something to that extent. And then she came out a few months ago and said any central bank digital currency not pegged to something is fiat. Well, what would it be pegged to? And when you talk about could this happen in October in Russia? Sure, it could, absolutely. And I think the way that they would do it, because see, President de Gaulle, who drained a good portion of the gold from our treasury in 1970, 1971, proved that convertible currencies convert. So what blockchain does is allow the immutability and the veracity of which each country pegs to be there without having it convertible. In other words, maybe you peg 10% or 20% of each currency unit to gold held on the blockchain and audited by independent international auditors. You can do that if you are open and transparent and do it the right way. You still have the ability to transact monetary policy because it's not a one-to-one, but a small percentage, but just enough to tether it, because given the choice, politicians will do what all politicians have done forever. Even going back to Roman times when they clipped the coins, that's why there are ridges on the side of gold coins, because they would clip it and make it just a little bit smaller. You do that enough, you have enough to make more coins. Well, going back to the beginning of money, politicians will choose inflation over austerity. So, yeah, I think this is how you give it credibility in a system that I believe has already lost a good amount of credibility, in fact, and is losing it rapidly across the globe. So, yes, the marriage of blockchain and the marriage of commodities together inspires confidence. And that's why when people say, who's going to trust? Well, you don't have to. If you do it the right way and have it audited, have it transparent, and everyone pledges the same thing to the distributed ledger, to the blockchain, you got a real fighting chance. And you asked me when we were in Vancouver, well, what could the West do? And I brought up Kristalina Georgieva's report. And at that point, she hadn't made the comment. But now she has. And she said a CBDC not pegged to something is fiat. Well, how does the West maybe stop this? How does the West maybe pull up from this nosedive? Do that. Get some legitimacy and credibility back into this system, one that is lacking it and is lacking trust. And indeed, I mean, you talk cryptocurrency again. It's about confidence. If you have no confidence in whatever it may be, then you're waiting for a rug pull. You're waiting for something to collapse. And I think no one will drink the Kool-Aid ever again the next time around, unless it is pegged to something with transparency. Zoltan Pozar calls this Bretton Woods 3, a system that will be dominated by commodities and transparency. This is the way to do it without having it convertible immediately by anyone who walks into a bank like they could do back here when this $20 gold certificate was the same thing as a $20 coin. And it's funny because now it says in God we trust, but back then, before 33, it says payable to the bearer on demand in gold coin. So it used to be one-to-one conversion. I don't think
We've
you'll
arrived at
see
the
that
apex,
again.
the pinnacle
but
of our
what gold will
exploration,
do
where we
when it
gather all
marries
the
with
insights,
blockchain
data,
is to
and
show
narratives to
exactly
present
what
the
every
ultimate
country has
revelation.
in the
This is where we
union.
break down the culmination of
pegged to this.
factors, trends, and strategic foresight that not only make the bold prediction of silver reaching $3,250 plausible, but paint it as a compelling possibility in the grand tapestry of global finance. Here we piece together the final elements of our story, showcasing how silver, the unassuming contender, is poised to redefine its role in the precious metals market and possibly outshine gold in a historic financial twist. At the core of this revelation is the undeniable fact that silver's potential is not rooted in speculation, but in a confluence of solid, multifaceted factors. The historical performance of silver, notably its staggering appreciation compared to gold from 1932 to 1980, sets a precedent for its capacity for growth. But history is just the backdrop for a much larger, dynamic narrative that unfolds in the present and projects into the future. Silver's dual nature as a precious and industrial metal places it at the nexus of market stability and industrial innovation. Its unparalleled conductivity, vital role in green technologies, and expanding industrial applications underscore its intrinsic value and future potential. As the global economy steers towards sustainability and technological advancement, silver's role is not just preserved, but magnified. The strategic maneuvers on the geopolitical chessboard add another layer of complexity and potential to silver's story. The expansion of the BRICS alliance, the exploration of alternatives to the US dollar, and the increasing interest in commodity-backed currencies position silver as a strategic asset. These shifts signify not just a reevaluation of silver's role, but a transformation in the global financial architecture, where silver's relevance is likely to be increasingly recognized and valued. In the realm of investment, the diverse avenues for engaging with silver, from physical ownership to mining stocks and ETFs like the iShares Silver Trust, SLV, reflect the market's recognition of silver's multifaceted appeal. Investors' strategic decisions, driven by a blend of market analysis, risk assessment, and foresight, contribute to the dynamics that could propel silver towards unprecedented heights. As we conclude this exploration, it's clear that the prediction of silver reaching $3,250 is not a mere fantasy. It's a possibility grounded in a complex interplay of historical data, market dynamics, industrial significance, and geopolitical shifts. Silver's journey is emblematic of the broader narrative of our world, a world in transition, where traditional norms are reevaluated and new potentials are realized. In presenting this comprehensive view of silver's potential ascent, we remind you that while the future is never certain, the paths we explore and the insights we gather equip us with the vision to navigate it with knowledge and foresight. This exploration of silver's potential is more than just an analysis. It's a journey through the evolving landscape of finance, investment, and global dynamics. As we draw this narrative to a close, remember that the story of silver, and indeed the story of all investments, is continuously unfolding. The insights shared here are but snapshots of a larger, ever-evolving saga. And if you found value in this journey, if the narrative of silver's potential rise has resonated with your curiosity and investment spirit, remember to subscribe. The world of investment is ever-evolving, and together, we'll continue to explore, understand, and navigate the dynamic landscape of markets, metals, and opportunities. Thank you for joining us on this journey through the intricate world of precious metals. Stay informed, stay curious, and most importantly, stay invested in the journey ahead. And remember, while we venture deep into the realms of finance and investment, the content provided here is not financial or investment advice. It's a tapestry of insights designed to inform, enlighten, and inspire your journey through the complex and fascinating world of precious metals. Stay tuned, stay engaged, and let's continue to unravel the mysteries and opportunities that lie within the lustrous world of silver and beyond.
Come off, and if it does that, I wouldn't be surprised to see silver actually come off a bit more if I'm looking at this inside of its established range. So it can come to low 20s, it could even do a 20 again. It depends, there's narrative being created by the central banks that there's going to be, they're pricing in all these cuts. Suddenly, one thing I would love people to understand, they get too taken up with central banker narrative as well in terms of your question. So everybody thinks, oh, they're going to cut rates. That means stock market up, etc., etc. It's going to be, the economy is tight. They're going to be giving some alleviation. Well, the point of cutting rates means you're valuing up bonds. Where my hand represents the value of bonds, cutting rates means that goes down and my elbow has to go higher. That means valuation up. But hold on. They're going to be issuing more debt than they've ever issued. They're getting a reduced tax take. They're funding wars in Israel, in Ukraine, everywhere else, all these extra normal activities requiring funds. It seems like a money laundering racket for me involving the usual suspects, but that's just me. How on earth are you going to do it? They're trying to break the economy, drowning it in debt. How does the valuation go up? Who's going to be all these buyers now? After the major turn in debt markets, which everyone has now realized finally 3 years later, who's going to be all these new buyers at these super low globalization rates when we were all working together and China was the workshop before bifurcation, before Russia, Ukraine, and this increasing hostility with China, before the BRICS really starting to become more of an alternative bloc, now pushing up costs of manufacture. So you've got an inherently a much higher interest rate environment to cope with. You've got the big gift of the Goldilocks economy brought to you by Greenspan, where we outsourced everything. Asset prices were allowed to run. That is inflation, by the way. Asset prices running, but you didn't get cost increases on your clothing and everything else because you workshopped everything offshore with child labor and other things where you didn't have such laws that allowed you to do it at home, now being done in India and all of these other places. Now that gift is being taken back, and now you've got this absolute proliferation of debt that has funded an asset boom. Who now wants to buy bonds that the bonds are going to really drop really far? Because if interest rates are to drop, the valuations of debt has to go up. That's the relationship. It's not going to happen once people have realized the debt game is over. You get the elevator cord snap event. And so all we're getting is a bit of mood music. And that is why central bankers across the world as well, Jesse, have said, hey, higher for longer, don't over assume big cuts are going to occur, etc., etc. Why are they all saying this? They are establishing alibi for the fact that the debt markets won't be able to sustain very long devaluations in yield and increases in capital value. Because who's going to be the buyer? They know the investment world isn't going to be a great buyer in here. So the debt collapse is part of the gold silver run in the end, and they are coordinated. Hence why, as I say, on the gold silver ratio, I'll just bring that chart into view again for everybody. The March 2020 events, this huge spike, absolute moon over here to the 129. When did it occur? I put the cursor there. You see at the bottom the black number, March 2020. March 2020. At the same time, the bond markets, if we go to US 30 and we do the monthly there, these things are 100% coordinated. There's the absolute capitulation. That's how trends end. Downtrends in yields obviously was a bull for bond markets. That's how they end. What's the date? March 2020. That was a cyclical turn of events, and gold is already in the beginning of its bull market, and silver will follow